Hi everyone and welcome to Rock Report. Here we host commodity experts and company CEOs to give our audience a good foundation in their research and due diligence. Before I announce my guest, please take a few seconds of your time to read the disclaimer and of course to subscribe to our channel. And today's guest is Jessup, CEO and Director for Magna Mining, base metal exploration and development company. Jason, thank you for coming to this show.
Well, thanks for having me back.
Thanks. I would like to start with two commodities that you have in the pipeline that your company has with their projects, so nickel and copper. Let's start with copper. Can you walk me through the current situation of the copper market? How are we looking today, and what can we expect next?
Yeah, we are bullish on copper, and we've really focused our company to be a copper mining company. Right now, the demand for copper is growing, and we've seen this over, the past few years, increased demand in copper, and what we've really seen a lack of is new supply coming onto the scene. And that's for a number of reasons. And one thing, it's very challenging to find new world-class copper deposits. We haven't seen very many over the last decade. And it is very expensive typically to bring on new greenfield copper discoveries, typically taking many years to develop once they're fully permitted, but also billions of dollars in capital. And what we have heard from some of the leading CEOs and leading copper mining companies in the world is at current prices, they are not incentivized to invest the billions of dollars in capital to bring on new projects. So what's happening is as we continue to mine more copper and deplete reserves, and supply is being decreased, but we see increased demand for copper with all the infrastructure spending, the electrification of the world. This is using a lot more copper. Really, we're coming to a point where I expect to see, an inflection point where prices will go up. There will be a lot of competition for the copper that is out there, especially, with what's happening politically throughout the world. There's going to be, I think, a lot of interest in securing good copper supply. And with that, I expect over the next 2 years to see higher copper prices. I think we're starting to see that just recently. It seems to be a breakout in the copper price in the last week or two, and I expect that we're going to continue to see very strong copper prices over at least the next few years. Longer term, I think the fundamentals are excellent from a supply demand perspective. So it is a great time to be a copper mining company.
Yeah, definitely. Do you believe that the current copper miners that have projects online that they have good margins at the moment?
I think that it definitely varies. A lot of the large operations that are in production were put into production at much lower copper prices, and so they were designed to mine at lower prices. So I think that most of them have decent margins, but again, as reserves are depleting, grades are typically going down as well, and so it's definitely getting tighter.
Yeah, yeah. What about nickel market? How do you see current dynamics in the global nickel market, particularly with the growing demand for nickel in electric vehicle batteries and stainless steel production?
Yeah, the nickel market is very complex. It is a unique market, and I don't pretend to understand all the dynamics of it, but there's a few things that really stand out, and one of them is the nickel market. The supply of nickel has increased dramatically from Indonesia. And in the last 3 years, I think there's more nickel that's come online in Indonesia than some people were anticipating, and that has depressed prices. I believe we found a floor price, sort of around $7 US a pound, I believe is the floor price. We've seen it dip slightly lower than that, but generally around that $7 US, I think, is where that floor is. Now, a lot of things can impact the price of nickel, and I think most of these impacts that may happen will be positive for the price of nickel. And some of these are going to be, again, around the political climate right now. And most of the nickel that is coming out of Indonesia is supplying China and their stainless steel market as well as their electric vehicle market. So when we look at how we price nickel globally, typically it's being priced off the London Metal Exchange. And as we saw in 2022, when the nickel price spiked with a short squeeze on the LME, and then that was quickly taken back down because of the impact, perceivably, it would have on certain people who were shorting the nickel price from China. It's quite obvious to me anyway that the LME is probably not the best way to be pricing nickel going forward. And so I could see something changing there where pricing would be more, I would say, well-rounded with the actual jurisdictions that are buying the nickel, whether it be Europe, whether it be North America, whether it be even Australia. So I think that there's going to be some changes in that there where it won't be so impacted by China and Indonesia. Now, again, with Indonesia supplying well over 50% of the nickel globally, having that much control is sometimes a real detriment. Whereas any kind of natural disaster, not saying there's anything going to happen, potentially any kind of natural disaster, whether it be a tsunami, an earthquake, fires, whatever, that could happen in Indonesia could have very material impacts on supply. And nickel's a small market, so any impact in Indonesia that would be reduced supply could have, a real effect on pricing. So there's a lot of things that could happen, and it's a very dynamic market. So I don't know where it's going to go, but I think we found a floor, and I think there's potentially a number of catalysts that could happen that any of those could, again, see a quick rise in the price of nickel. And I think that could be very positive for companies like ours that aren't currently focused on mining nickel at our Sudbury mine and our other projects, but in the event that we do see higher prices in the future, nickel could be turned on quite quickly.
That's a great overview. I would like to discuss more about Magna, your company. The acquisition of portfolio of base metals in Q1, including the producing McCreedy West copper mine, was described as transformative. Can you elaborate on how this acquisition enhances Magna's position in Canada's newest copper, nickel, and precious metals mining company?
Yeah, this acquisition really, it puts us in a unique position to be a producing critical mineral mining company in Canada, and there aren't very many of us. And so we've worked on this acquisition for a number of years, and making that leap from exploration development into production is a big step for any junior company. So, we were really pleased. This was a targeted acquisition we had been working on for many years. The McCreedy West mine, this is our producing mine, it's a mine that myself and our team know very well. I was ran the operations there for FNX Mining for a couple of years. Jeff Huffman, who's our COO, was also at the McCreedy West mine running operations. And, the Levack mine that's next door, which is on care and maintenance, which we also acquired, both Jeff and I have had experience operating that mine as well. So we have a lot of experience. We recognize what these mines can do, and they're, I'd say, properly funded and properly managed. And as a flagship asset for us and a non-core asset to their previous owner, we think there's a tremendous opportunity to breathe a lot of life back into these mines and bring them back to their former glory of being a strong, long life producing mines. McCreedy West has been producing since 2003, since it was reopened by FNX Mining, and prior to that produced 15 million tons by Inco. So it's a long life operation. Last year we came out with resources, about 9.3 million tons of total resources, with over 5 million tons of that being in our 700 copper zone, which we're currently mining. Tons of potential there. It's really exciting. And then with that, we have the Levack mine, which is on care and maintenance and fully permitted. We have Podolsky Mine, which is on care and maintenance since 2014, again permitted, ready to go. We have our Crane Hill Mine, which we had since 2022, which again is permitted and all set to go into development. So having permitted projects like that that can potentially be bootstrapped from our McCreedy West mine, a very enviable position to be in as a junior company, and again in one of the best mining jurisdictions in North America. So it is very transformative for us.
Definitely, definitely. Jason, what operational improvements are being prioritized at the McCreedy West mine, and how do you plan to address the previous owner's underinvestment to unlock the full potential?
The number one improvement we are making is in development underground. So underground drift development, the ramps and the accesses to get to new stoping, new mining areas. That is the most important thing really of any mining company, is to have enough development in front of their mining so that you have adequate number of stopes and ability to do definition drilling well in advance of your mining. And this is something that too often we've seen companies make the decision, and a very short-sighted decision, to not invest in enough capital development, or invest the money but not get the development footage, the advance that they need every year in order to sustain their production. And what happens is they prioritize ore production to meet their guidance at the expense of development, and then you essentially limit your workplaces, paint yourself into a corner, so to speak. And this really is it's sort of the end of the beginning of the end for any mine. So, as this being a non-core asset in the past, the previous owner did not look at it as something that they wanted to grow and sustain. It was something they were looking to sell. So the capital investment has been limited over the last few years, and we're going to catch up on that. So we did a financing that we closed early March. We finished Q1 with $38 million in the bank. So we're investing, and we haven't given formal guidance yet, but we'll say between $5 and $10 million this year of sustaining capital into the mine to ensure that we are properly set up and ready for 2026. And we want to be in a position where we can have a long mine life in front of us that we can continue to execute. But it starts with getting our development in place in 2025. And that's what we're set out to do. And I can say that I'm very pleased with the progress we've made. We've gotten the crews at McCreedy West focused on development. It's the number one KPI I ask about when I go to the mine, and it is something we've improved dramatically just in the last 3 months.
Great stuff. Jason, the recent tool milling agreement with Glencore is a significant milestone as well. How does this agreement impact Magna's production strategy and cost efficiency at the Shakespeare and Crane Hill?
So, yeah, Crane Hill specifically, we did a bulk sample last year, and it was to test an area we refer to as the 109 footwall zone. And it is a high PGM and copper-rich footwall zone that was actually daylighted on surface. So we took a 20,000 ton bulk sample of that material, basically from contact to contact across the entire zone, to determine A, reconciliation against the block model, and B, to get some actual real data on precious metal recoveries at Glencore's Strathcona mill. So that was a very successful bulk sample. We completed that. I think the mining was completed at the end of August. We had it processed in September, and we received some funds for that, I believe, in April. So yeah, it was a great opportunity. We already had a ore selling agreement in place with Valley for our advanced exploration program at Crane Hill, but it's great to have agreements in place with both Valley and Glencore, the two mills that operate in Sudbury. And that gives us the ability to potentially, it's not saying we're going to do this, but sell some parts of the deposit to one mill and some to another mill, or different zones that perhaps one can recover precious metals better than the other to kind of maximize our revenue and also in some ways keep some competitiveness between the two mills to ensure that they're providing the best terms possible. So it was great to complete that bulk sample, and we'll use that information as we continue to advance at Crane Hill.
Sure. As I remember, the Shakespeare has a feasibility study from, I believe, 2022 or 2023, and it has a pretty good pre-tax and net present value of more than $200 million. Have the recent market conditions and operational advancements affected the project's economics?
Well, definitely, a lot of the revenues would come from nickel, and I think we used $8.50 US nickel price in our feasibility study. So at $7, you'd have less revenue from nickel. Now, other commodities such as gold and platinum, palladium have done quite a bit better, and so there'd be some trade-off there. Copper's higher than what we use. I believe we use 375 US, so copper's a little higher. But in general, we still really like the Shakespeare project. It is an exciting project and very strategic as a critical mineral project that has a relatively modest capex and a relatively short construction period. But it does require, as per the feasibility study and our permits, its own mill. It's an open pit project. The economics are best when you have a mill that's tailored to that material right next to the open pit. And that's the way the feasibility study and the permits and the closure plan are all designed. That being said, the capital cost estimate in 2022 was 233 million Canadian to build that mill, do the pre-strip, and build the tailings and co-disposal facility. That's a lot more capital than what we would expect to spend on Levack, Crane Hill, and Podolsky mine, which are also permitted together. So right now our focus is on McCreedy West mine, and then the potential restart of Levack, Crane Hill, and Podolsky. And then looking down the road, if all things work out well and we are producing from those mines, we could use cash flow to build Shakespeare. So it's not going to be one of our first projects that we're going to put into production after we ramp up at McCreedy West. It's in the pipeline, but due to capital costs at this time, it's a little further down and won't be the next mine that we move forward.
Got it. With over 50 million tons of indicated resources across your projects, how do you plan to optimize throughput to achieve steady state production targets, such as 1,000 tons per day goal mentioned for McCreedy West?
Yeah, so at McCreedy West, it's really about quality. That's going to be our focus. We have two mills that we can sell ore to, and both mills have excess capacity. So if we wanted to send more, there's capacity there, and I think it would be very much welcomed. We have lots of discussions with Valley and Glencore, and and they're great partners to work with and are looking for ways to help us supply them with more ore. But really, for us, it's about quality. It's about going after the best grades we can, that are in front of us, and not about mining as many tons as we can. So that's our focus. But that being said, we do have a lot of resources. We will be working on mine plans for Levack mine. We have a PEA, and we will develop a pre-feasibility study before we go into commercial production with Crane Hill. And with all of that, I think we can produce, be a bigger supplier of ore to the existing mills here in Sudbury. So that's our plan, is to utilize as much of that in the most optimal way to provide as much cash flow so we can reinvest and grow the company. Because we really are, even though we're a producer and we have great exploration potential, this is really a growth story about using cash flows, reinvest to restart operations that are basically ready to go and require a very modest amount of capital investment.
Yeah, how are you looking on M&A? Do you have, I know that you were pretty active when it comes to the M&A. in the area? Any specific plans to expand? Any plans to divest maybe non-core assets? What's the longer term plan?
Yeah, we've been really successful with M&A. I think that we've proven that we can do smart deals. So our Crane Hill deal was a great deal for shareholders. Our KGHM deal was a great deal for shareholders. We announced another acquisition of some exploration properties last December from NorthX. We're still working on getting all the approvals from the ministry to close that deal, but that, again, another smart deal where very little cash up front, but gives us a lot of optionality. So we are still very keenly interested in certain very strategic acquisition targets in Sudbury, and we are working quite diligently on a few of those. And the types of acquisitions that we think are really attractive to us are deposits that are owned by the other companies here in Sudbury that perhaps have synergies with the existing infrastructure that we now own. And if we can acquire any of these deposits and utilize our infrastructure to access them and mine them and then sell them to perhaps the owner to go into their mill, that would be the type of acquisitions we would be very keen on doing, and we have some targeted projects that we would like, and we're going to keep working on them. So I guess the message is, yes, we're very interested in still doing M&A. It's got to be the right M&A, and people shouldn't be surprised if we announce another acquisition in the next 12 months.
Okay, you mentioned your cash position, so you are fully covered for 2025.
Yeah, so we have raised, as I said, we closed $33.5 million early in March, and we haven't completed and provided guidance on what that's going to look like. So I would say our base case right now is yes, we are funded. We've seen some interesting moves in the price of copper. Platinum has started to really pick up. Palladium's looking good. Gold has done well all year. So as we look at options for growth, at the right cost of capital, we could speed things up and move from our base case of a bootstrapped model into investing more into restarting perhaps Levack or Crane Hill sooner. So I would say on our base case, yes, we're good. But there's some interesting developments happening. There's been a lot of talk from the Ontario and federal government about supporting critical minerals projects, and a few of our other critical mineral companies here in Ontario have publicly stated that certain projects have been designated by the Ontario government as critical mineral projects that they are going to support. So there is lots of potential for us to maybe receive funding or find very favorable cost of capital to move things forward. So we're in a good cash position right now, but we may do more, and that may include additional capital later on this year.
Sure. Government support is a great thing, but do you see something similar like in the United States, fast tracking of projects, permitting, or do you see a different format when it comes to Canada?
I think that there is a lot of work going on right now with specifically within the Ontario government, where they've announced some programs to definitely speed up the timeline for permitting and approvals, and the federal government is also at least indicated that's going to be happening on certain projects to move things forward. But aside from that, there's also been money allocated in different forms to support the critical mineral industry and the mining industry. And I think our governments are finally recognizing that we have the metal in the ground, and it does create a lot of economic benefit when we are removing it from the ground and processing it and then building with that metal here in our countries. So now finally we're seeing that there's incentive to invest. So Again, I'll name some names, but like Foran Mining announced a financing where the Canada Growth Fund, which is a fund put in by the Canadian government to actually make equity investments into mining companies. And that's managed by a third party, and they do all their due diligence. But you can see now that there's money being deployed to actually support and invest into these companies. And that is fantastic to see. It's great news. And I think, us being in that same space with permitted projects is, a very interesting place to be. The Ontario government has announced a critical mineral processing fund just recently, and that has been passed now by Treasury, and they will be looking to deploy $500 million into critical minerals processing and expansion of processing plants, new processing plants, and some key designated critical mineral projects. Again, being in Sudbury, being a critical mineral project and having all the infrastructure here, I would have to think that, again, Magna's in a very favorable position potentially for this type of funding. So a lot more than just permitting. I think there's actually going to be support for these projects to get them moving. And then, with that, hopefully that attracts additional outside capital alongside perhaps low-cost government capital. And I think it's a great combination, and it's great to see that our governments are recognizing the importance of mining to our economy.
Yeah, things are moving. Jason, final question, looking ahead for the rest of 2025, what key milestones should investors expect from your company, particularly in the terms of exploration, resource updates, and production ramp-up?
Yeah, so we will be, looking forward to giving some guidance to the rest of the year, early in Q3, and I think that's going to be really important. We have just announced our first quarter financials, which we haven't even spoken about, but in May we did announce that. Just to recap, for the month of March, which was just 1 month of production, we produced and sold about 790,000 copper equivalent pounds at a copper equivalent grade of about 3%. We from that produced a small cash margin, which I was very pleased with, considering it was a transition first month of ownership. But we will give some more guidance for the rest of the year early in Q3, now that we've had a quarter and almost 2 quarters to get our feet underneath us at this new operation for us. We'll also be putting out drilling results, and I think that's a really exciting part of our story. Although we have great resources, there's still potential for new discoveries, some really high grade deposits here. So we have a active drill program. Results will be coming out fairly regularly, and I'm excited to see the results we're going to have in the second half of this year. As well, we will be updating our resource, or putting out our first compliant NI 43-101 resource for the Levack mine. Currently we have a historic resource from the previous owner, but we will be putting that out by the end of Q3, as well as giving direction on our internal restart study that's being completed for Levack mine. And that'll give a lot more color on timelines, costs, and what that potential restart may look like. So that'll be coming out in Q4. So lots happening there. Aside from all of that, there's always the things I can't typically guide to, but we've touched on in this conversation. So there may be some other positive news coming out later this year.
That was Jason Jessup, CEO and Director for Magna Mining. Jason, thank you for coming to the show, and I wish you luck going forward.
Thank you very much.